Hello everyone and welcome to Financial Accounting. In this video, we will discuss current assets and prepare the current assets section of the balance sheet. What is a current asset? A current asset is an item on a company's balance sheet that is either cash, a cash equivalent, or which can be converted into cash within 1 year. If a company has an operating cycle lasting more than 1 year, an asset is still classified as current as long as it is converted into cash within one operating cycle. There are many types of current assets which vary by industry. Generally, the following asset types are classified as current assets: cash, including foreign currency; investments, except for investments that cannot be easily liquidated; prepaid expenses; accounts receivable; and inventory. Presented on this slide are selected accounts of a sample corporation at December 31st, 2023. We will go through the list line by line later in this video to decide which accounts are current assets. The following additional information is available. We will review each item to discuss which are related to the current assets and which are not. Inventories are valued at lower of cost of market using LIFO. Equipment is recorded at cost. Accumulated depreciation computed on a straight-line basis is $50,600. Short-term investments have a fair value of $29,000. The notes receivable are due April 30, 2025, with interest receivable every April 30th. The notes bear interest at 6%. Accrue interest due on December 31st, 2023. The allowance for doubtful accounts applies to the accounts receivable. Accounts receivable of $50,000 are pledged as collateral on a bank loan. Licenses are recorded net of accumulated amortization of $14,000. Treasury stock is recorded at cost. The goal of this exercise is to prepare the current assets section of the company's balance sheet as of December 31st, 2023. Let's get back to the balances provided. The first account is inventory finished goods, and the balance is $52,000. Inventory is an asset that is intended to be sold in the ordinary course of business. Inventory is typically classified as a short-term or current asset since it is usually liquidated within 1 year. I have many videos about inventory. I'm posting the link to the playlist here and in the description of this video. Unearned service revenue is a liability account, and equipment is a fixed or long-term assets account. These accounts are not included in the current assets section. The next account is inventory work in process with a balance of $34,000. It is a current asset account and will be included in the current assets section. The next account is cash with a balance of $37,000. It is a current asset account and will also be included in the current assets section. The next account is debt investment trading with a balance of $31,000. It is a current asset account and will be included in the current assets section. A trading security is an investment the holder expects to sell in the near term for a profit. This investment is initially recorded at cost. At the end of each subsequent accounting period, adjust the recorded investment to its fair value as of the end of the period. Customer advances is a liability account and will not be included in the current assets section. Restricted cash for planned expansion is a long-term asset. However, it is common to report total cash and subtract the restricted cash on a separate line. Restricted cash is a designation placed on a certain amount of cash by the board of directors. This restriction is intended to keep those funds from being used for the general operating activities of the company. Instead, the designated funds are reserved for a specific purpose, such as paying for a constructed asset, a dividend payment, a bond payment, or an anticipated payout resulting from a lawsuit. It is not necessary to maintain restricted cash in a separate bank account, as the restriction is only within the reporting entity's accounting records. The amount of any cash restrictions and the reasons for them are stated either in the company's financial statements or in the accompanying footnotes. If restricted funds are to be used within 1 year, they are classified as current assets. Otherwise, they are classified as long-term assets. I have a video how Tesla reports its restricted cash. I'm posting the link here and in the description if you want to look at the real-world example. The cost of goods sold is an expense account, and notes receivable, as we learned from the additional information provided, is a long-term asset. Both accounts will not be included in the current assets section. Accounts receivable is a current asset account and will be included in the current assets section, net of the allowance for doubtful accounts. The next account is inventory raw materials with a balance of $207,000. It is a current asset account and will be included in the current assets section, like other inventory accounts. Supplies expense will not be included as it is an expense account. Allowance for doubtful accounts is a contra asset account of accounts receivable. The balance in the allowance account will be subtracted from the accounts receivable balance. I will leave the link to the video explaining how allowance for doubtful accounts works in the description of this video. The following 3 accounts will not be included in the current assets section. Since we know from the additional information provided that licenses are amortized, we assume it is a long-term asset. Additional paid-in capital is an owner's equity account. I will post the link in the description if you want to learn more about this account. Treasury stock is shares in a company that the issuer has reacquired. The amount of cash paid to buy back treasury stock is recorded in a contra equity account that appears in the equity section of the balance sheet. Now let's take a closer look at the additional information and see whether we need to use any of it to prepare the current assets section. Inventories are valued at lower of cost or market using LIFO. We're not provided any information about market value, so we assume that we need to report inventory at cost. We don't need the information about equipment as it is a long-term asset. Short-term investments have a fair value of $29,000. This comment is about debt investment trading with a balance of $31,000. Since it is a trading security, it was initially recorded at cost, but it needs to be adjusted to its fair value at the end of the year. Therefore, it will be presented in the current assets section at its fair value of $29,000. Let's look at the next item. The notes receivable are due April 30th, 2025, with interest receivable every April 30th. The notes bear interest at 6%. Accrue interest due on December 31st, 2023. Because the notes are not due until 2025, the notes receivable are considered long-term assets. However, interest receivable that must be recorded at the end of the year is a current asset and must be reported in the current assets section. The interest needs to be recorded for 8 months from May through December. The amount of interest receivable that needs to be recorded is calculated as follows. $40,000, which is the balance in the notes receivable account, is multiplied by 6% and multiplied by 8 and divided by 12. The allowance for doubtful accounts applies to the accounts receivable. Accounts receivable of $50,000 are pledged as collateral on a bank loan. The allowance for doubtful accounts balance will be reported as a reduction of accounts receivable in the current assets section. The amount pledged as collateral on a bank loan doesn't affect the amount of accounts receivable presented on the balance sheet. Still, the company must disclose the terms of the collateral in its financial statements. As we discussed earlier, licenses and treasury stock will not be reported in the current assets section of the balance sheet. Now, let's look at the current assets section of the balance sheet. Cash is $87,000 and restricted cash is $50,000. The balance in cash is $37,000. An acceptable alternative is to report cash at $37,000 and simply report the restricted cash for planned expansion in the investment section. That investment is presented at fair value, which is $29,000. Accounts receivable is presented net of the allowance for doubtful accounts. The balance is $149,000. Interest receivable is $1,600. We already discussed how to calculate it. All inventory is recorded at cost. The total is $293,000. Total current assets are $509,600. I hope you found this video helpful. If you did, please make sure to subscribe, hit that like button and ring the notification bell so you are notified when we release more videos like this. Don't forget to visit my channel for more videos on financial and intermediate accounting. Thank you all so much for watching, and I hope to see you all again in the next video.